The government's made some updates to the budget, but they haven't done anything for our family doctors to remain competitive and keep our family doctors and other medical practitioners in Canada. So I've got nothing positive to say on that front, hence I'm deciding to stay more positive. Hello and welcome to the Truth About Real Estate Investing show for Canadians since 2016. That's over 300 episodes, probably about 350 by now. We've ranked as high as number 81 on iTunes in the business category globally. My name's Erwin Cito, and as I've shared on past episodes, I made the decision to begin diversifying my portfolio by selling local Ontario properties. I have three closing. I closed one this past week, and I have two more coming up this next week. And I'm beginning the process of buying income properties in the USA. My criteria for buying is simple. It's direct 100% ownership and control, like I do here in Ontario, but I want the best of the best managing my properties. Hence, I'll be buying via a company called Share, who is an institutional asset manager. It's like being a Costco member. I benefit from their buying power. I get preferred pricing. In this case, under Share, I get preferred pricing on property management, leasing fees, repairs, maintenance, and insurance. So while I have to pay Share fees, I save a lot in the other areas. In the news, there's this little company called Samsung. They're actually not that little. I Googled and I found out they are the largest company in South Korea, by market capitalization. As in, if you add up what all their stock shares are worth, they are worth the most. Samsung recently reported earnings. They actually reported earnings this week, and they absolutely crushed it. They tenfold increased their first quarter operating profit. Now, what they're saying is AI will drive technology demand going into the future and going into the rest of this year. So if Samsung is 10xing their operating profits, where and how are they investing in AI? I ask these questions. That's all I ever do. All I ever do is ask questions, which is like the nature of this show. So I asked Google. I read an article, a couple articles. Samsung is investing a combined $37 billion into building two microchip manufacturing facilities just outside Austin, Texas. So, as many of you know, I did a site visit of one of them already. Only about 3 weeks ago did they announce the second microchip plant, and they already have one already existing in Austin. Anyways, so the new investment will employ a projected 4,000 high-paying manufacturing jobs. And as my theory is, well, my investment goals is always to earn above market returns by investing. And so my plan is to invest nearby where these plants are being built in Austin, Texas. I've already given the names of the neighborhoods I want to own via Share. The neighborhoods are called Hutto and Round Rock. Now, that's not advice. I'm just sharing how I'm choosing to invest. And as always, I'm open to criticisms. Note, my plan is to only buy one house in Austin, as my plan is to buy in other cities, probably at least 3 cities total before I ever circle back and buy a second property in any one city. My objective is diversification, and that's not a problem for me because Share is a nationwide organization that can cover me basically wherever landlording in the USA makes sense. Now, keep in mind, historically, real estate in the US between 1970 and 2023, so that's 53 years, on average over that significantly large sample size, real estate increased an average of 5.5% each year, and that's compounding, 5.5 compounded annual growth rate. I personally think I have a shot at being that because of my very targeted areas for investment near historic levels of manufacturing investment into creating high paid jobs into largely AI and automotive manufacturing, specifically EV. Anyways, my clients and I were getting about 7% here in Ontario, but I'm looking forward to being more passive with no rent control, having the majority of rights in my favor, and of course, beating the average. I've got sources in the show notes, of course, as always. So if you go onto my website, truthboutrrealestateinvesting.ca, or if you're on my email newsletter, you will see the infographics from Visual Capitalist. If you're interested in learning more, I have virtual tours of USA income properties coming up, as well as a joint how to earn 6 figures investing in the USA workshop with my lovely wife, Cherry Chan. She will be presenting and I will be presenting as well, along with members of the Share team. Make sure you're on my free weekly newsletter where we send a deal each week from the USA, along with both free and for-fee events. Simply go to my website, www.truthaboutrealestateinvesting.ca. I have free reports there, including top places to invest for 2024 in the USA, how to invest in the USA guide. Easy peasy. Just go to my website and enter your name and email. We're going to make real estate investing great again. Our friends in the USA have a bit of a housing crisis themselves, so we can help them out as we're welcome to by all levels of government there, unlike here in Canada. On to this week's show. We have my old friend Andrew Hines and his co-author of an all-new book, John Schwenker. Andrew Hines hopefully needs no introduction, and John is an everyday hero, a firefighter and recovering real estate investor. Andrew has taken his turn sharing how he lost money investing in Ohio. Now it's John's turn to share how he made a bunch of money in Ontario and lost all of his profits in the recent correction. But it's not all bad news. John's learned a lot. He's written a book in the meantime. John's short-term rental property in the USA is a winner, and I'm confident you'll agree, especially when you hear his numbers on his vacation property in New York State when compared to his Niagara Falls, Ontario short-term rental. The numbers are completely night and day, as well as how he's being regulated by that local government. In this episode, John and Andrew share their journey to writing this book, so we may all learn from their mistakes and how to be successful in their book, which is similar to Tim Ferriss's Tools of Titans, where experts have contributed chapters to the book, including yours truly. The book is called Real Estate Titans: Tools, Tactics, and Wisdom for Canadian Real Estate Wealth. I've included a link in the show notes to Amazon so you can pick up the book, and to follow John and Andrew. They're both available on Instagram and very active. And I don't know how else to put it, but I did chirp John. He is a fireman. He's a young, good-looking guy. He does appear in a calendar. So he's a good guy, obviously, because he's taking his shirt off for charity. Who else? What other kind of good guy does that? Anyways, please enjoy the show. Hello, John. Hello, Andrew. Welcome to the first threesome we've ever done online for the podcast.
Yeah, we're on to something here. Thanks for having us.
For the listeners' benefit, well, the listeners who've been around for a long time know I've had two guests in person. This is the first time we've done it online, which makes sense since we're all a little bit far apart. But yeah, let's go. What's keeping you busy these days?
Yeah, who do you want to go first?
Oh, you spoke first, Andrew. You first.
All right. Well, when was I last on your show? A year ago?
About 12 months.
Yeah, maybe a bit more than that. So I got a 2-year-old, and I have been still busy in the US. Last time I was on, we were talking about the new developments, the builds. I've since sold all that off. I did build 3, sold off the extra lots that I have, sold those buildings, and basically just decided that Cape Coral wasn't going to work anymore, given some of the changes in the market. I know you and I have chatted about this recently, but basically things just got squeezed. Costs went up on building, and then of course the market kind of came down slowly. Not as bad as it did in Ontario, but it did come down in Southwest Florida too. And I just kind of decided that it wasn't worth the risk for the prospective profit margin. It just didn't justify taking the risk. So I took a couple of small losses on some of the lots just to liquidate them, knowing that I was kind of getting a negative return on equity at the moment with the stagnant market, and then just paying property taxes on those lots. So shifted gears. Been doing some off-market acquisition right now, making offers on land. I was chatting with you a couple of weeks ago. So we're somewhere around 6,000 offers in 30 days, and I got another 4,000 and change going out pretty much today. So keep it rolling.
And that's in Florida.
All in Florida right now. Yeah, and I got the hospitality business up here. We completed our second full season glamping. We acquired a resort as well, 9 acres on the water in Tobermory. And so it's all part of the getaway group of companies, sort of what we call it. And we do luxury glamping and luxury stays in the area. And like I said, we're expanding. We probably did a 75% increase in our sales year over year. for 2023, and we're looking to do a similar growth again next year because we added a bunch of new inventory and new trailers, new tents, really awesome stuff. Anyone wants to check that out, they can check us out on Instagram at the Grotto Getaway Glamp. And yeah, that's the most of it. Writing a book, we're going to talk about that today. So John and I, that's why we're here. We're talking about the book. And yeah, that's had us both busy. So both of our plates have been full, and I will I'll pass it back to you, Erwin or John.
Yeah, before we get to John, just want to highlight for the listener, like I've known Andrew for quite a few years, and it's good to see that you're willing to share loss and also that you're willing to pivot when the markets change,
Yeah.
right? Because
Well, how many people had losses, right? Like, I mean, I had some wins too. I mean, I look at Florida and Southwest Florida in my first experience as being um, an okay endeavor. Like I didn't lose overall, but it didn't justify the effort. So that's pretty much where I walked away from it. Like I apply when I'm doing investments down there, I apply my own internal rate of return. And if I can't profit on top of that, to me, it's effectively a loss because I could just put that money out in a passive investment.
yeah,
So that's in order to keep things equal, I have to look at it that way.
right. So for those who don't know, like Andrew's a smart guy, so if his money's not working hard for him, then it's a loss essentially.
Yeah. If you know
And
what you could
you've made lots of
alternatively
money,
invest
and
in, right? Like I know what I could go get 14% passively. So if I'm not getting that actively, why am I doing it? I should be able to do that and then some actively.
mhm, mhm. And I was going to say, like, you made a lot of money in Ontario investing as well.
I had some wins, I've had some failures. I've shared both. But yeah, we'll all continue to have failures. They're only really failures if you don't learn from them, right?
Yeah. If you don't cut them off when you need to.
Mhm.
So also we have John on the show. So John, this is your first time on the show.
First time on the
Welcome.
show? Yes. Thank you,
And what's keeping you
Erwin.
busy these days?
Yeah, the novel's been one of the biggest things that Andrew and I are writing. We were fortunate enough to have you as one of our interviewees in the chapter. We really appreciate that. Your chapter is fantastic. You gave a ton
Thank you.
of insight and wisdom, so we appreciate that. But I actually approached Andrew for this idea about 2 years ago, which I can't believe that it's already been 2 years already. And I've told the story once or twice, but I pretty much just sent Andrew a DM video on Instagram. It was just like, hey man, I've got this idea for a book. I want to do this, this, and this. And we set up a meeting for a couple days later. I pitched the idea to Andrew, and he's like, yeah, man, that sounds awesome. Let's go for it. So it was a perfect match because I've written a book in the past. So I have all of the publishing knowledge, editing. I've gone through the whole process before. And Andrew's knowledge, it's you can't really top that. And his Rolodex of guests he's had on the show. So it was pretty much a match made in heaven. We both used our strengths, and I just kind of brought Andrew a list of people I wanted in the book. You were one of them, and I had maybe 20, 25 other people, and Andrew was able to match us all together, which was fantastic. And that's pretty much been the biggest project we've been working on. But aside from that, I guess your listeners wouldn't know me. My day-to-day work is a firefighter. We just kind of talked about that off camera. And yeah, that's kind of what I do during the day. I have a handful of Airbnbs in Ontario and one in Ellicottville, New York, at Holiday Valley, nice little ski area out there. So that's a lot of fun. And over the last year, it's kind of just been stabilizing after everything that happened in the market, kind of took a step back with everything. And we've been stabilizing our Airbnbs and portfolio. And that's kind of the day to day right now.
So I asked before we start recording if everything's fair game. You said
You,
yes.
you did.
John, can you share the story how you got introduced to my podcast?
Yeah, that was actually, that was probably maybe 4 years ago now. And my father was a big listener of Irwin. And when I started learning about real estate, that was probably 4 or 5 years ago as well. And I was a big Andrew Hines fan, and that's why I actually approached him for the book. I learned most of my stuff from Andrew, and then I was talking to my dad about his podcast, and he's like, "Oh, you got to listen to this Irwin guy. He's fantastic, and you got to listen to him." So, yeah, I started listening to Irwin's podcast. That I must have been 2019 or so, maybe 2020, not quite sure, but I've been one of your, what is it, 100 listeners or 1,000 listeners for
17.
17 listeners. Okay, I knew. But yeah, I've been one of the originals, I'd like to say.
Thank you for listening, and thank you to your father. And I can't let you off the hook for this either. Before we were recording, we Andrew and I learned something very personal and intimate about you. That you do
Well,
take your shirt
this,
off for a calendar.
yeah, seeing as this is your first virtual threesome on a podcast, I feel confident sharing that. Yeah, I'm part of the firefighter calendar as a firefighter in the Niagara region. We do this for charity for Pathstone Mental Health. Um, it's a fantastic organization. So yes, I'm willing to take my shirt off for a good cause sometimes.
And you get nothing for it. This is all for charity.
It's all for charity. Yeah, it's a great time. Good charity, good time. Couple
Mhm,
laughs are had.
mhm. And I think that's a good segue into the book. Like people don't write books to make money. Like there's not nearly enough money in it for to cover all the time and effort.
That's for sure. It's been, it could be 1,000 hours between Andrew and I at this point, between all the interviews and storyboarding and the editing process and back and forth. You know yourself know, Erwin, that we had to do kind of an update a couple months ago because so many things have changed in the market. So it was almost like two full rewrites of the book and everything. So yeah, it's a ton of time and effort. But the reason I wanted to do this initially was when I got into real estate and flipping houses, I really didn't know much about it. I kind of just jumped in because I knew real estate was a good investment, but I knew we were playing with some big numbers here, some life-changing numbers, but it's also life-ruining numbers at the end of the day. And I didn't know much about real estate other than what I've learned from Andrew and yourself, Erwin. So I wanted to kind of build a community of people. I was able to speak to, I think, 20 or 21 investors and interview them for the novel. And I just personally wanted to learn from the biggest names in the industry. And that's how it all got started.
So let's start with what have you learned along in your own journey? Because it's awesome you mentioned Ellicottville. I need to hit you up later because we just got back from Huntsville and there was no snow.
Right. Yeah, Ellicottville is a beautiful area, but we can talk about that. But the biggest thing in my real estate journey was I started flipping houses about 4 years ago. We were doing the nicer areas in St. Catharines, kind of the north end. It was myself, my father, and sister. We were flipping like higher end houses between the 600 and $900,000 mark. And we were making money hand over fist. It was crazy. It was all during that boom. And that's all I knew at the time. I've heard about the 2008 scare when everything crashed, but people weren't talking about that 2 or 3 years ago very much. There were people like both of you who understand it that would say, that would reference it. It's not always going to be great, but for someone like me that's not been in this industry for very long, I just did whatever I could to get more money, make more money, and get more properties. So some of the basics of real estate investing went out the window, but I ended up borrowing a lot of private money, private financing, private mortgages just to get more properties under my belt. And then when everything crashed, I think it was the start of Q2 2022, I was holding three properties with private mortgages, private funds, all between, I think at that time, 750 and $900,000, each of them between 100 to $150,000 worth of renovations in all of them. And we ended up having to liquidate that at a huge loss. For example, I've told Andrew about the one house we purchased for 750,000. We put in anywhere between 100 and 120,000, and then things got so bad we had to let it go for under 700,000. So major loss on that one. We had a similar situation with the second house. And then the third house we ended up turning into an Airbnb in Niagara on the Lake, which is now doing wonderfully, but that's money we didn't expect to have tied up in a property long term. And yeah, after a couple of years of doing great, it kind of all came to a halt at that point when the market crashed. It was about a year of stabilization. And yeah, it was a very tough year and a lot of learning for sure.
And were you able to keep your lenders whole?
Yep. Yeah. At the end of the day, everybody got paid back and everything, but it was at a big personal expense. Unfortunately, had to dip into the personal funds and everything. But yeah, everything worked out with the lenders and everything. But pretty much all the progress we made kind of took a halt, and but we were able to stabilize at the end of the day.
Did you basically give back everything you made then?
Yep. Yep. In so
Right.
many words. Yeah. It's too bad because I think we started in 2019, and like I said, we were absolutely crushing it with a bunch of flips. I still do have a handful of Airbnbs, which is great. So I do have some of my portfolio left, but pretty much, well, 100% of the flipping profit was gone and had to liquidate some more of the portfolio just to pay everybody back.
Thank you for sharing, John.
Yeah, for sure.
Yeah, who
Yeah,
shares that, eh? Like, yeah, no problem.
yeah,
Keep on moving.
yeah,
No,
it
people
was
just usually
tough.
go quiet. Like
That's
so
it.
many social media profiles have gone quiet.
Yeah, people just go quiet, like they don't
Yeah,
share. Yeah.
for sure. It's been a hard time, and I've been very open about it the whole time. And my fiance has been incredible, honestly. Would not have got through this without her. We talked about it off camera. She's a social media manager, and she was doing very well before all this happened. But when all this happened, I didn't have enough cash flow. Like our personal expenses were absolutely insane, and we didn't have enough money month by month, even liquidating some of the portfolio, just these private mortgages we were holding and paying back all these lenders and stuff. We pretty much had to 3x her business overnight. We did that in about 2 or 3 months just to live, just to be cash flow positive. So thank you to Courtney for that.
Shout out Courtney.
Yeah, no kidding.
I think you owe her one.
I owe her lots. I owe her everything. That's for sure.
And you kept your job through the whole process, right?
I did, yeah. Yeah, that all went to private mortgages and stuff. I'd get a paycheck, it'd go one direction. So yeah, it's been, like I said, it's been tough, but we've got through it. We're still paying for a little bit of it, but yeah, I think we're kind of on the other side of it now.
So if you didn't have your girlfriend in your great paying job, where
Yep.
would you be?
I would have had to sell all of our Airbnbs for sure. There would have been no question. Oh, well, now that we're sharing things, our monthly expenses were about $22,000. That was between just our personal house, all the interest payments, the private mortgages, and stuff like that. I'm only responsible for 1/3 of the flipping corporation that we had. So for those three properties, I was on the hook for 1/3 of all those properties. But I also had the private funds I was borrowing. So yeah, it was lots of money going out every month, and it was not going to principal. That's for sure.
So is that gross debt or is that total debt? Andrew, you had your mortgage license. What is that?
Total debt service includes like, yeah, everything, credit cards, everything that's not property
So total.
related. So anything directly related to
So
the real estate.
22,000 total debt.
Mhm.
A month. Yeah, that was going out. Yeah.
Okay. Did not
Hence
know
the,
this was where we're
the
going.
need for the plan A, B, and C. Yeah, like you obviously on
And
that
that's
one
it.
property,
Perfect.
you were able to turn it into a positive, right? Of course,
Oh,
like you
for
said,
sure.
you got money tied up in it, but
Yeah, but yeah, like I said at the start of this, I wanted to write this book to avoid all this. Unfortunately, I started writing this book like as this was all happening, so I thought I had a plan A, B, and C, but I didn't know it could be that bad. Even my worst case scenario, I didn't know house prices were going to drop 20-25% overnight. I didn't know that no one was going to be buying homes. Everybody was selling off what they had, and for that house I was talking about that we would have sold for 950 to 1 million and we had to sell it for 700,000 less than what we bought it for. Like I never expected it to be like that. I thought minimally we could break even, sell it in a timely fashion and but no, it was definitely not like that.
Right. Well, not everyone sold everything. I'm still bag holding.
That's because you probably used good investing principles like I did not. So you were able to hold these assets,
Could have been better. Yeah.
of
Well,
course.
that's for another show.
But yeah,
So,
like
John, before we move on to the book, can
yeah,
you talk to what were the relationships like? Because this was a family-run business, the flipping business. How were the relationships with your partners?
it was
Which you said was your sister and your father?
yep. Yeah, luckily for them, they didn't have to borrow private money. Like we all had to do the private mortgages, of course, but I needed private money for all the renovations and everything for my third. So they were in a bit better of a spot than I was. So everybody was stressed the whole time, but luckily, like, yeah, we're family first, and it's hard with family sometimes in investing and in life and everything, but we got through it. We figured it out, and we still own that Niagara on the Lake property together as an Airbnb, and it was figured out. Like we all had to help each other at different points, but figured it out, got through it, and that worked.
So what would someone who read the book, would they be able to avoid these mistakes, these challenging times that you've had?
Absolutely. Yeah, so that was the goal. So basically, we use the book Tools of Titans by Tim Ferriss as kind of the guideline for the
Love it.
novel. We
Love the
have
book, love the
20,
author.
yeah, I see it in your background actually right there, bottom left corner, that nice little orange one.
Yeah.
Yeah, fantastic book. But
Oh yeah, 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 there
basically,
it is. Yeah,
oh
and you can see
yeah.
4 hour work weeks on my right. I can see the spine. But yeah, go ahead.
Yeah,
Sorry.
I can see it too. Yeah, so there's about 20 interviews with some of the top real estate investors in Canada. So people are able to start from the beginning with their story, what they did to start their investing portfolios, and then all the way up to who they are now. So a lot of times it's hard to look at someone like yourself, Erwin, and be like, well, how do I get to Erwin's level? So we wanted to give people everybody's inception story and then kind of the steps of how they built their wealth and their portfolio. That's kind of one section of the book is those 20 interviews. But then the start of the book is a lot of Andrew's knowledge being poured into the reader. We have a couple chapters like Andrew's golden rules of investing, how to find your how to purchase your first investment property and things like that. It's very actionable chapters where you can even just print them out, use them as guidelines and checklists and stuff like that. So we've really broken it down to the base level for the newer investors. And then we have those 20 chapters going into the expert stories.
Sounds pretty awesome and something everybody should probably consume at the beginning.
Yeah, the big thing, like, so we wanted to make sure that the process and methodology and because it's a buffet, there's all these different things you could do. How do you synthesize like the different strategies and pick what works for you? So a lot of it's about finding that fit. And then of course protecting your downside, which of course is harder in Ontario now than it was before when cash flow is probably your biggest protector, which most people don't have. So we did, focus, and this is what created so much extra work is with the downturn and the new interest rate environment and economic climate and declining real estate values is, how do you succeed now? And what's going to work now? Because a lot of people can't relate to how, say, you started Erwin all those years ago or how I started all those years ago. But they can get my 2 cents on now that I've seen 12 years of this, like, how would I start again if I had to start right now? And in a lot of ways, I look at it as starting again. A lot of what I'm doing, although I'm coming in with a better start than I came in last time. But I think that there's a lot of opportunity right now. It's pretty exciting, and I know you have your ideas, which you shared in the book too. And I'm I'm super like this is probably the happiest I've been going into a new year from an optimism standpoint. Like, yeah, of course, that nothing's perfect, but there's a lot of good stuff on the horizon.
Yeah, I like to agree, especially where we are. I know we're recording this January 2nd. I know we're releasing this in February, but I think we've reached the bottom for both the U.S. and the Canadian markets. So yeah, I agree. I'm very optimistic. Oh, so actually, Andrew, question for Andrew. Andrew, John mentioned there's what did you say golden rules of investing?
Yeah, the golden rules or Andrew's golden rules of investing. Can't remember the exact title, but yeah, that's one of the chapters.
Andrew, can you share some of those golden rules? Maybe give me three.
Oh, put me on the spot. I'd have to see how we wrote it down, but I mean, obviously, a big one is cash
Don't
flow.
invest in Ontario. No, I'm kidding.
Cash flow number one. Um, John, what did we put in there?
I
I
know we
uh,
haven't gone over that in a bit,
I
but
share these things all the time, but how I exactly wrote it, for me, I'm going to sound like a broken record. If you listen to me, have your plan A, B, and C, be able to pivot. These are things that would be in those golden rules. Invest in a way that fits with your own capabilities. It fits with your why. There needs to be synergy between what you can, want, and need to do, and the strategy you picked. So just because you want to do Airbnb arbitrage or hospitality and you want to go full time into real estate, but at home you got kids and you got a full time job, like that's just those don't fit. You might
Hmm.
be more set up to do a more passive type of
Hmm.
investing.
Hmm.
So that would just be a little bit of a preview of some of the stuff we cover.
Right. Let's pick on John, for example. I think his story is actually a strong one in that, Andrew, you and I have talked about, we talked about like what's out there in terms of like social media marketing and whatnot, all these programs that promise you, if you take their course, they can quit their job. But, we were just talking about John. If he had quit his job, he'd be financially ruined.
Mhm.
yeah, for sure.
uh, and that's just the reality of things. And we got to talk about, and Andrew, you mentioned cash flow, and I was talking to an investor this morning about, we're talking about cash flow in Ontario, and my point was to him was, we've never felt inflation as badly as we have the last 2-3 years, right? And then so a pro forma for our property, a residential property, say just use something boring, something very vanilla, a single family home in Ontario anywhere, right? Could be condo, it could be detached home. Your cash flow, we all know your expenses are going to go up, but we have rent control in Ontario. So your cash flow is only ever going to get worse. Is this a good investment? For those who are listening, like both John and Andrew are smiling. I'll let either of you go. What do you think?
Go ahead, Andrew. Oh, geez. Yeah,
well, here, I'll throw out something as an observation. Neither of you are investing in long-term residential properties. That's a very easy observation, right?
No, we're not. And I mean, in Ontario, for me to invest in that kind of thing, I got to get it at a price that makes sense for the headache, right? Like that's the new reality of it. You always had that risk, but before we had compensation for that risk in the form of cash flow, in the form of appreciation and 30% a year returns. That was factoring in your leverage, and a healthy cash flow. Like, it was very protected. It was very hedged. It felt great. And then we got into a place where, returns, as I can calculate them on my cash flow sheet, are like looking like 12%, which you can get more in private lending. So now all of a sudden it's like, wait, why would I do that for all the headaches that come with it? You're speculating at your appreciation. Right now, I still would estimate that we're going to get completely stagnant or 1%. I mean, of course, in 10 years' time, I expect real estate values to be up, but I don't want to bank on a big number there. And knowing all that, it doesn't look great. And especially when you don't have cash flow, you have no ability to pivot. So that's why I'm not really active in Ontario. What I am open to in Ontario is the fact
sorry, Andrew,
that
just to clarify, you're not active in residential long-term
residential
rentals.
in Ontario. Yeah.
Right.
I am open to a deal in Ontario. Like, if it comes at the right price, of course. And I think people are sleeping on Ontario right now because everybody's looking at the US. So I was in the US before most of the people who jumped on the bandwagon here, but I just acknowledge that if everybody's looking south, then I'm still going to pay attention to here. But yeah, my activities are still south. And for the time being, they will be. I don't think that the rules as they stand in the real estate, so the landlord-tenant board here in Ontario, are going to stay the way they are. I think that there will come a turning point once institutions own most of it, where it'll become much more landlord friendly. But for now, it is what it is. I'll still take a great deal, and I still think there's great opportunity here. But yeah, just not my key focus right now.
Yeah, and for me, I'm not touching any long-term buy and holds or anything like that in Ontario. I have a couple Airbnbs in Ontario, and they're still cash flowing very well, especially the ones that I purchased a couple of years ago. The one property, we have a 2.7 interest rate, and the cash flow is fantastic on that. We have another similar one like that in Niagara on the Lake. But then the Niagara on the Lake property I mentioned earlier, we have a we have a huge mortgage on it, and I think our interest rate's around 7%. And even though it's in Niagara on the Lake, renovated perfectly, has a hot tub, like, it's as nice of an Airbnb as you can have, and we're barely cash flow positive. So even at that point, is it worth it? Not so much at 7%, but the properties we bought a couple of years ago, yeah, they're still huge cash flow machines and everything. But like Andrew said, if you can find a great deal, and maybe for me, again, I like the short-term rentals, it's a lot better for the cash flow. But the biggest thing for that is just make sure you're in a short-term rental municipality that's favorable for it, because a lot of municipalities are not. So if they don't have their established rules, I would highly recommend not entering that area.
Yeah, mature. You want mature bylaws. They've been there a long time. One other thing I'll add to that is, now this is what I was getting at with people sleeping on stuff like VTBs and negotiating special terms and all the things you can do in Ontario when sellers aren't getting 1,000 offers thrown at them. That's where you get to kind of create your deal, and you can create sort of something that isn't on surface level. People wouldn't necessarily see it, but it could be a fantastic deal for you. So not saying everybody needs to race to the US, because I don't think that's the case. You might, if you go that way, you might have an easier time, but not necessarily.
Well, I just want to share with you both. A Toronto realtor friend of mine was telling me he's busy. It's insanely busy in downtown Toronto already.
Yeah.
He was hoping for a quiet holidays. Nope. With fixed rates coming down, they're already seeing. He shared with me a Toronto semi-detached home had 25 offers on it, so for 300,000 over asking.
So just with the news that they're gonna come down,
Yeah,
obviously
yeah,
fixed rates have come down, but they'd already had an effect of stimulating the real estate market, which actually puts in jeopardy the likelihood of the real estate rates coming down
could be. We'll see what
in the
happens.
short run, anyway.
John, question about your Niagara on the Lake property. So,
Yeah.
so when I see this kind of activity already happening in downtown Toronto, that's usually like kind of like our epicenter of real estate activity. To me, that's the early indicator. That's the canary in the coal mine that we're going to start seeing activity pick up. Like Toronto being downtown Toronto will be the epicenter, and it'll ripple out. So eventually, it'll make its way up to Niagara on the Lake, and maybe not 25 offers, but you'll see buyer demand pick up probably very significantly over the next 2 years. What would your plan be then with your Niagara on the Lake property? Is that something you want to continue to hold, or would you take the exit when you can?
We have it at a place where it's cash flowing nicely now, but it took a lot of work to get there. But if they get back up to the prices we were seeing a year and a half ago, it'd definitely be worth looking at because that's the one property that I wouldn't mind selling at some point just to get back the rest of the finances that I need to pay everybody back and then be completely whole again personally. But yeah, I think we would sell it just because, again, with the interest rates where they are, it's not crazy cash flow positive. It's not in our slow season, we're cash flow negative. In the main seasons, we are very positive, but it's almost not worth it. Kind of like Andrew said, the return on investment just isn't there on a property like that. So if it does turn in a year or two, I think we'd definitely look at selling.
So a question I'm starting to ask folks is, especially as we're into this kind of like real estate market pivot, is what is your next income property purchase going to be? So I'll start with you, John.
Yeah, for me, I am liking Over the Border, definitely. Ellicottville, New York. They have Holiday Valley there and Hollamont, the two ski resorts. They have a casino right out there, some amazing golf courses, and some world-class trails. It's very big with like mountain biking out there. I've got a property out there, and my partners on that property have a second one out there. So it's a good spot. It's just, again, interest rates are a little bit high right now. So it might not be a terrible idea to pick one up before everybody starts buying again because you can always just refinance when the rates come down. But I think the next place I'm going to go is somewhere like in Ellicottville because with our Airbnbs, we always want people to have a reason to go to these places. All of my Airbnbs in St. Catharines and Niagara, they're right beside a beach or in Niagara on the lake. So it's always going to be very touristy areas and people are going to keep coming to Holiday Valley. Like Blue Mountain's blown up and is super crazy, the real estate out there. So I honestly believe that's an area that's going to pick up is Holiday Valley and Ellicottville. So somewhere like that. And I do like the 30-year mortgages out there as well. So definitely looking over that way.
Right. So sorry, just to just from my own understanding, you're saying Niagara on the Lake is kind of like seasonal versus Ellicottville is more of a four season.
It's not so much the Four Seasons in Ellicottville, but it's just so much cheaper there that we can make
Oh,
so much money in the high season that we cash flow very well there. Where Niagara on the
Summer's
Lake,
popular too, though, right?
it is absolutely.
Yeah.
Yeah, it's kind of like the wet seasons that aren't great, like early
Yeah.
spring
Fall,
and
spring.
and yeah, exactly. But yeah, no, it is almost a four season place where in St. Catharines and Niagara on the Lake, it's definitely more of a spring, summer, early fall type place.
can you walk us through some numbers? What you think your next investment property would be like in Ellicottville?
Yeah, in Ellicottville. So we bought this one almost 3 years ago now, and we bought that one for 250,000. If we were to buy that same property, same property today, they haven't gone up like crazy, so we could probably pick up a comparable property for about 300,000, which is pretty nice. There is not a big inventory out there, which is something to note. And also they don't allow Airbnbs right downtown in the core. So we're kind of like in Farmville. We're about 7 minutes drive away from the ski hills and from the downtown, but it's a nice quick drive. So yeah, if we buy that for 300,000, probably it costs anywhere between 40 and 50,000 to get everything to get it set up to how we like our Airbnb standards. I'm talking like very minor renovations, all the furniture, all the bedding, linens, towels, all that, get everything set up for our maids. So we're probably looking about 350 all in to get set up for a middle of the road Airbnb in a nicer area.
Okay, so I've been looking at Blue Mountain properties, and
Oh, yeah.
this sounds much more affordable.
It is
It just
much
makes
more
so much
for
more
affordable.
snow.
sense, doesn't it? And,
Yeah.
and I had him on my podcast. We were running through those numbers, and he did this incredible games room, and I think you were at like 70,000 a year revenue before, John, and now
Yep.
you're thinking like I'm thinking that games room could put you up to 100.
Oh yeah, we've had it live for maybe a month now, and we've already seen the bookings. They've gone through the roof in both volume and price. We've raised our prices about 15, 20%, and people are not having an issue paying for it.
So you'll easily surpass 100 then.
I think so. And like I said, we bought this house for 250 like a couple of years ago, and I think our mortgage rate's locked in at 2.9%. So
For how many more
we
years?
haven't
30?
27 years?
27 years. Like you can't beat that.
So don't sell that.
It's incredible. No, we won't ever.
That's
Yeah.
great.
Does this? Can I find this property online?
Yeah. What would be the easiest if I gave you the address or
Sure. Like, can I? Yeah, let's shout out your property.
Okay,
Probably gonna
perfect.
get it fully booked for the rest of the.
Oh, I
the ski
appreciate
season.
that. Yeah, it's 6365 Somerville. So Sommerville. So Somerville Valley Road. Yeah, we're booked up pretty good the next month or two.
No
But
kidding.
shout out to Pinkwall Designs. They're the ones that did our garage. They did the designs for our garage, and then me and my partners on the project went down there and did all the work, and it's been amazing.
Uh, do you have a website or an Instagram for this property?
I might just No, we don't. We've always talked about doing it. We just haven't done it. But I could always just send you the link, maybe. We could text it to you. That would be the easiest.
I know Andrew didn't say go running to the US, but this sounds pretty awesome.
It's
Because I literally
pretty
just got back from
incredible.
a ski trip where there was no snow.
Yeah.
But for my research via ChatGPT is my understanding is Ellicottville, even though it's south of Niagara Falls, it gets more snow than Toronto, which is
It does.
crazy.
Higher
Absolutely.
elevation, right? It's like 1,500 feet. I think if you're in Burlington, we're around 600 feet above sea level. So I think that has something to do with it.
Yeah, definitely. Erwin, I'm just sending it to you right now. Sorry, took me a second to get there.
Oh, good. No, for the listeners' benefit,
Yeah.
again, so Holiday Valley, which is the biggest ski resort in the area of Ellicottville, like
Definitely. Yeah, it's huge. And like I'm in St. Catharines, so it's about an hour and a half to get there. Where for me to get to Blue Mountain, it's 2.5, 3 hours. So it just makes sense. Quick ride over the border and you're there, and
yeah, I might
it's
do
beautiful.
a place next year. Hopefully, you'll allow me to book you direct versus on Airbnb and save the fee.
Absolutely. Of course. That sounds
or-
great.
Because I was on their Instagram and they were open for skiing like the first or second week of December,
They
which
were,
is
yeah,
just nuts.
Yeah, a couple weeks. So it's really nice. Yeah.
Versus they had no snow in Whistler over Christmas.
Right. Yeah, for whatever reason, lots of snow there.
I should stop talking about this so I don't oversell the place for the next holiday.
I know.
That's what I always do. I talk about things too much, and then everybody goes and does it.
Yeah,
That's it. Yeah, like I said, with the interest rates being higher, it is definitely harder to cash flow there.
Mhm.
But it's still doable. Still
I know,
completely
but
doable.
someone could go with a bit of cash, or even like if they use a HELOC, at least as variable, and then it'll come down as rates come down.
Right. And it's interesting. They have a lot more land out there too. So I've always had it in the back of my head of doing some sort of developing out there because you can get quite a bit of land for pretty good prices out there.
Yeah, because I found your property on Zillow, and you have a huge garage on it.
Yeah,
You should
it's
see the
massive,
garage now.
actually.
Look up the listing there, Erwin.
I just
I'm looking
sent
at
it
it right
to you.
now.
I just sent it to you on Instagram, or when I couldn't get your phone number quick enough. So
Here, Erwin, I'm putting it in the chat here on the Zoom. There you go.
Oh, you found it on B&B. Perfect. Oh wow. Okay, I'm just gonna share screen so folks on the YouTube will be able to see it.
Awesome.
So would this fit the golden rules?
Yeah, absolutely would fit the golden rules. Yeah.
The big thing is
Again,
your plan A, B, and C. Like,
yes.
what would you do? Yeah, this is my biggest test is like, what would you do if your plan A didn't work out? Obviously, their plan A here is go in, run a hospitality, unit and be positive cash flow to some degree. I'm sure you guys had a wealth building goal in there as well. Now, as far as what happens if things don't go well, your first pivot might be to sell. Would you necessarily make money that way? I don't know if market values have changed enough that you would, but then you could do that. You might lose a little bit. Not a great plan B. Your plan C could be to rent it out just to families or do some sort of midterm stays. If for some reason Airbnb say was outlawed, and this is type of stuff that we talk about in the book is kind of examining what could happen and what you would do in each scenario.
Mm-hmm.
And this one works
Right.
out really well right now. Now, would it work out well on a monthly basis? I feel like, John, if you guys could strip out the utilities and just do a simple monthly rent, you might be okay. And from what I hear, New York State is actually not bad to be a landlord in as long as you're not in New York City. So it does look like you have some contingencies. But one thing to note about sort of the plan A, B, and C and having contingencies is that it becomes more and more important to have great contingencies the less rock solid your plan A is, right? If you know that plan A is like 50-50 shot of working, then your contingencies need to be that much better. If you know that you're rock solid on your plan A, it doesn't mean don't have contingencies, but maybe you have to be okay with an outcome where you might lose a little bit if the worst happens. Like if we took John back to before he lost everything and said, hey, if shit hits the fan, you're going to lose 200 grand per house. Are you cool with that? He probably would have said no and picked a different type of investing. But if he was making $1 million on every house, he might have said, yeah, that's no problem.
John, do you know what would this rent for? This house rent for as a long-term rental?
I haven't looked it up in about 3 years, to be honest with you. I haven't
Haven't had
looked
to,
since
I'm
we
guessing.
actually bought the property. Yeah, and Ellicottville's pretty established with all their short-term rental bylaws and everything like that. They just said pretty much stay out of the main village and do whatever you want on the outside, and we pay our fees and we're laughing. But no, I haven't looked at long-term rentals there for a long time. And then our last plan that Andrew didn't say is basically we could just use it as a vacation home at the end of the day if we wanted to, because the prices are so low there and we love going there. It's beautiful, and in the summer and the winter we love skiing, and we actually don't use it very much because it's always booked. But if we had to use it as a vacation home, we'd love that too.
That's the whole being okay with the other outcome, right? And not every outcome has to be a profitable one if you're okay with it.
For sure.
How does the low season here compare to Niagara on the Lake? I just want to draw a comparison, basically a long analogy for the listeners' benefit. Most of our listeners will understand Niagara on the Lake. It's kind of like it's a what's the equivalent in BC for our BC listeners? Is that Napa? No, sorry, it's
Oh, it's escaping me.
what's the
Kelowna.
wine region in BC? Oh, Okanagan.
It's like the Okanagan Valley. Yeah.
Okanagan. Yeah.
Sorry, Pete.
Yeah, like
Ignorant
Niagara on the
Ontario
Lake.
investor here. Apologies. I'm an immigrant kid. All right. So yeah, John, how does this compare? How would low season compare between the two low seasons? Because they're different, right? Ellicottville is busy
Absolutely.
in the ski season, is it?
It is. Yeah. So January, February, March, we're absolutely slammed. Every weekend, every week is pretty much booked at our absolute premium prices. And then, like I mentioned, there's a season or two that's pretty slow. March and April are a little bit slower as it's pretty wet. But as it dries out, May, June, July, August are absolutely crazy. And then September, October, what I didn't know is they do all these festivals out in Ellicottville Way. They do all these Halloween festivals and beer fest, cider fest, all these different things. So fall is absolutely crazy there too. And then November, December, a little bit slower again, and then picks right up again for winter.
And then how do the rent rates compare between the two markets?
For short-term rentals,
Yeah.
uh, trying to think.
It's not as expensive. It's quite a bit cheaper to stay in Ellicottville.
It is a lot cheaper, yeah. And again,
It's $395 a night Canadian.
I have
What's your Niagara on the Lake property?
yeah, it's very different. Like again, like I haven't done the cash on cash in a long time, but our cash on cash is exponentially better in Ellicottville than it is in Niagara on the Lake for us. But
Right.
again, we bought the Ellicottville property a year and a half before. We have that 2.9% mortgage rate versus a 7% in Niagara on the Lake. If we had both properties at the same time, it'd probably be pretty comparable. Yeah, sorry, Aaron, I don't have actual numbers for you right now.
That's okay. But just hot, like back of a napkin, it sounds like you could probably afford two Ellicottville properties for the price of your Niagara on the Lake property and generate way more
Absolutely.
cash flow.
Oh yeah, 2.5 times probably even. Yeah, for sure.
So I can understand why that'd be your next investment property. All right, same question for
Yeah.
If
Andrew.
you think about it, like, so let's just, everybody talks about the 1% rule, or they used to. So what if he
Before it
does
disappeared.
110, if he does 110,000 divided by 12, so that's 91.66 a month on average. What is that out of the, say you're in for what, 300, John, on it?
Yeah, that's pretty accurate. I don't know if we're gonna hit 110. That might be a little aggressive, but
Okay, say I'm off by a bit. Your 3%
yeah,
rule. Your
right,
3% rule if you hit 110. So
right,
some simple math. I mean, to put it in perspective, at a 2.9% mortgage rate, that's a grand slam, in my opinion.
for sure. Yeah,
Yeah, I
I
think
wish
we're
we
just creating
bought
a whole bunch
more.
of competition for John.
Let's just push the air
Yeah,
date back a little bit until we all pick up one as
that's
well.
it. Yeah, exactly.
Now, both of you guys are big on research as well, and Andrew, I know you're big into the recreational stuff as well. The question that comes to the top of my head is how do you do research on these things, and air DNA always seems to come up. How do you guys do your market research for recreational use properties?
I mean, I can speak, like, we will try Air DNA wherever we can. Like, I'll buy the subscription to the area. I haven't done a lot of it. Like, I'm not like the Airbnb master or anything. The hospitality, when we got into Tobermory, it was pretty much a decision based on what we knew of the area. We knew of the offerings it had, the popularity that was growing, and then the limited hotel facilities. But Air DNA was pretty useless for the area. It just didn't have enough base of knowledge on the area to really be that helpful for us. So, I feel like we probably, in hindsight, could have picked even better markets, but we liked that market. It was familiar. And, I've spent a lot of time up there.
And then, sorry, you mentioned after a recent purchase. Can you share like high level numbers? Like how did it make sense? Like how were you able to come to the decision that it was a buy?
Neptune's, we were pretty optimistic about what we could do uh, from a general revenue standpoint, and then also the ability to add units. So 9 acres, there's only five cottages on that right now, but the zoning allows, so the as of right zoning allows for pretty much as many as we can fit, as long as we respect the setbacks. So we're just in the process of doing the development on that. Profitability is there. We're working through those numbers to kind of refine them right now, and a lot of it's going to depend on the feedback we get from the municipality in terms of what they're willing to allow. But initially, we were quite hopeful that we could make the existing houses profitable. But with the sort of like the post-lockdown era, rates have come down quite a bit and made what would have worked, say, during lockdowns would have been very profitable, lesser so. So we actually were a little surprised that we were lower than we expected for season, but we also came in low. Like we came in late. Like we didn't get into the market until we closed in end of May of 2023. So we didn't really have any sort of run up with our platforms, Airbnb, any of that. Like we inherited some bookings from the previous owner, but we're optimistic that this coming year will be a heck of a lot better. But we're also not waiting for that to happen. We're going hard on the development play because the zoning's there, waterfront property. So we're pretty optimistic about what we can do there. It's just about finding one specific model from a construction standpoint that works really well and has a lot of character, and getting kind of a volume building discount.
Can you kind of paint us a visual picture Because I know you're very eloquent. You mentioned development. Like, what do these properties look like? Are they cottages? Are they yurts?
So what's there right now looks like, little bungalow style cottages. And then there's the main house, which is, distinctly not really a cottage. It's on the road front. The previous owner lived in that building, but we've converted it into one of the Airbnbs. That one is right now available for year round, but we just haven't done what it needs yet to really make it appealing for year round use. And Tobermory is just like frigid and cold and, desolate in the winter for the most part. Although we're looking to change that. Can't change the weather, but we can change what to do. So that's what's there right now, but we're looking into a number of different things, including like an A-frame cottage that we can kind of rinse and repeat. But we're going to keep it interesting, whatever we do, make it Instagram worthy, that, big thing. And then of course, kid friendly. We do get a lot of families up at that particular location. It works really well for families. So it's a key of being able to access all the nearby amenities and then having a heck of a lot of stuff for the kids to do.
So I know I'm a lot older than both of you. So when I went to friends' cottages, they were usually very, very basic. I remember going to a friend's cottage where there was no ceiling. It was just, a peaked roof, and then there was walls between rooms, but there was no ceiling. So there was no complete separation between bedrooms. That's what I'm saying. So you had to be quiet. Anyone who snored, you could hear it because again, there was no complete separation. But Andrew, you're talking about like these had to be Instagram worthy. Where I stayed was not Instagram worthy. It was more, it's bare bones. No way it was Four Season. All the cutlery and plateware was, someone bought it from like the 1970s garage sale. You know what I mean?
And that's what these look like. Like a lot of these houses, the existing ones, like they're not super great construction. They're very basic. They're not like Instagram worthy in any way. But that blends in that market, right? You can do fine with that. But if we want to do better than fine, which is what I always aim for, right? You never just aim for average. Because if you aim for excellent and you hit average, then I guess maybe you'll be okay. But we always want to go, the best we can go within reason. Right. And so that's what we're doing for the expansion.
This isn't for your IG game. I imagine there's returns involved. Incremental.
Well, that's the big thing. Like we're taking what works at the camp and applying that at the cottages. And people come to our camp and they literally want to do yoga poses in front of the tents and take photos of it and then share it on their Instagram. They do reels. They do, of them by the fire. And it's like a memorable Instagram worthy experience. And we just want to make sure that we create that same thing because that drives our own marketing for us at no cost, right? Like, we invest in the experience, but they advertise us for free. And when we've done, like on our camp, for instance, we've done it 2 years in a row where we got 17,000 or more comments of people entering for a free stay at our facility. Basically, just tag somebody to enter yourself for a chance to win a free stay, and 17,000 plus each time we did it. So they went pretty viral. Explore Ontario, we did like a promo with them, and they jointly posted and did the giveaway, and it worked out well. So this is what we're trying to do with the cottages as well.
I'm laughing because I follow John on Instagram and I know how when you said people literally do yoga poses in front of where they're staying. John is, for anyone who doesn't know, John is well traveled and goes to places just as nice as Andrew's campground.
Just a disclaimer, that's because my girlfriend is in social media. She's a social media manager and influencer, so most of this is against my will. But yeah, I have a couple photos.
Are you looking right now, Erwin?
Yeah,
oh my goodness.
That's where my eyes are diverted.
Oh boy.
Is this on Courtney's Instagram?
No, it's on John's. There's literally John shirtless. I'm staring at somewhere really nice.
Yeah, I think that one's Croatia. Yeah, we've been on a few fun trips. Oh boy. Yeah, but if firefighting and real estate don't work out for me, I'm a great photographer and videographer now. All of Courtney's Instagram is pretty much me doing all the videos and photos. So I've got another career there waiting for me at least.
There's one of you in Bali, and I don't know, it's some sort of hollowed out palm tree that you're sitting in. This is kind of like what Andrew's talking about.
Yeah. Well, that's us.
John.Schwenker on Instagram. You can see.
Maybe I'll break
See,
1,000 followers now. Thanks, Erwin.
we should definitely have Courtney up to the camp. I'm sure
I'm
you guys
surprised you
could
went
do
out
some
already.
shirtless photos of you up there, John. I'm sure people would love it.
Oh, perfect. We'll set it up.
That's hilarious. Everybody just listening to this is probably really scratching their head right now.
Yeah, sorry, everybody.
Well, that's why I'm telling them where to find John's Instagram, so they'll let in on the joke.
Oh boy.
So yeah, so I guess that's interesting. It must be a KPI for Andrew's business. Like, how many times can they find their campground on someone's Instagram?
It really is. It's a funny thing. Like, how do you not just be like, if you're trying to think about what's your competitive advantage that somebody can't copy, sure, they can't copy your location, but if we're like a cottage resort, there's plenty of other cottages around. So how do we become distinctly different?
Yeah.
And like momentum and first mover advantage in that space is important. Like, if you have a reputation, people know you by name, or they know of what you stand for and your cool experience and your brand precedes you, then I think that your longevity is much more protected.
And you're getting free advertising for it.
And free advertising, which is huge, right? Because then that drives demand. Then your equilibrium price per night goes up, just like John's experiencing right now on his Airbnb. All of a sudden, you got a games room, demand is up, and your price went up because of it. And that's the key long term, because average results, like if you look at average results in Ontario for just about anything, it doesn't really make that much sense to go in on it right now. So it's doing better than average, or getting a better than average price, or a combination of all the above.
That's why I need to book John's place in Ellicottville before this episode gets out.
I want to see some yoga poses. Yeah,
Erwin
I
will
want
be
to
doing
see you
yoga
do.
there.
Yeah, downward dog in the garage. Perfect.
So I apologize, because I think we've gotten away a bit from the subject, the topic of the book. But I'm guessing that both of your investments fall in line with what the book teaches. Cash flow first, plans
Well, what's
A, B, and C.
interesting, the people we interview, so many of them, you see like the fundamentals coming out in what they've done, right? And some of them, maybe you would say, hey, for me, I wouldn't feel comfortable with that, like, because everybody's going to apply those fundamentals in their own way, right? And some people have a different risk tolerance, which is fine. Not every investment is for every person. So yeah, for sure. I mean, that was the point. And when I remember when John and I were doing the interview where we were talking about my chapters and like my fundamentals, like there was a pretty deep discussion there. We talked a lot about it, and I remember you really loving that discussion, John. So
I did. Absolutely. Yeah, it's all most of your big principles compiled into, I don't know, 20 pages into the first 20 pages of the book is all of the basics of real estate investing and how everybody should approach it in my mind. But then after that, it's more of a buffet of how everybody built their wealth. So learn the fundamentals from Andrew, read the chapters from all the interviewees, like find what strategies you like, take what you like, discard the rest, and then really attack one avenue of real estate, and you'll have a pretty good base from there.
Yeah, and this show is kind of like a buffet as well, like this episode specifically, because Andrew's recreational properties are significant scale. Like, Andrew, you have several partners on them, active partners. Am I correct?
yeah.
In different departments, like one for like daily operations, like
Yeah.
you have like an acquisitions team.
Well, the four of us, we all we take on different things. We do have a significant employee base that works the sites for us. So we had up to 10 employees at the height of the summer at any given time. And that should probably grow this year between the two facilities. So lots to do, lots to grow.
Lots to grow. Versus John is, we're talking about 300 grand American. That's a very reasonable bite for most GTA people that live in the GTA to afford that.
For sure, there is still affordable real estate out there. You just have to pick and choose what strategy is going to work for it. And it just so happens that the Airbnb strategy works fantastic for it. Moving forward in the future, like I've done a lot of flipping of homes. So maybe the next step for me is going there, buying a cheaper property and doing some renovations there, kind of combine my two skills, and we'll see what happens out there.
And then we talked about like risks and plans B, A, B, and C. I think we should also touch on the fact that, if John can get like a large summer business, then you really reduce the risk. You really improve your cash flow as well, right? Like we talked about Blue Mountain, for example. Like when I was growing up, nobody went to Blue Mountain in the summer. Like almost nobody. Now it's nuts.
Right.
Right? No, actually, no, sorry. People tell me it's busier in the summer than it is in the winter, which is
Yeah, the mountain biking too, right? That's
yeah.
a big
Oh
thing
no,
there.
it's like the bachelorette capital of the of Ontario. And
Yeah.
don't ask me how I found out.
I've been to a bachelor party there. That's a good point.
Yeah.
Not bachelorette.
But again, like there's probably still upside for John as well with climate change, and like I said, there was no snow in almost anywhere in Ontario in the ski area versus Ellicottville had snow, right? So John still has upside. His
For sure,
investments more
yeah.
protected than other people's investments, and
Yeah,
again,
they're
lower entry point really reduces risk.
for sure. And they're investing a lot of money into the town of Ellicottville right now. So I do believe it's going to get more and more built up. And prices have started creeping up, but I think it's going to really, again, I don't want to make a prediction or anything, but I only see it becoming more lucrative tone out there.
Well, the U.S. economy is strong as well. With
For
a
sure.
strong economy comes people wanting to spend more on recreation.
Definitely.
Yeah, so less likely need for plans B and C.
For sure.
All right, gentlemen, I have to go to hop to another interview. Which is funny enough is that I have to drive to Andrew's office now. Any final words? Where can people find the book?
Yeah, so it's going to be released on Amazon, and we are going to be doing an Audible version as well. We haven't quite got there yet, but that is one of our big goals. Like we were saying, we don't have our official release date yet, but we expect it to be out in mid-February. But we'll definitely be releasing it on both of our platforms, Andrew and mine on Instagram, to release when the book's actually coming out. But as of right now, we don't have a date for it.
And
What's it called?
so it's called Real Estate Titans: Tools, Tactics, and Wisdom for Canadian Real Estate Wealth.
I love it.
So a little bit of a play on Tools of the Titans. We had the inspiration from that, so we wanted to sort of build that into the title.
Love it. Love Tim Ferriss. Love 4 Hour Work Week. Love
big fan.
Tools of Titans. Then I had something else, but I totally forgot. All right, gentlemen, thanks very much for doing this.
Yeah. Thanks
a lot,
everyone.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.